This is a free chapter of our newest course, Futures 2.0. This is a follow-up course to Futures 101, which is available now for free on ASFX TV. Futures 2.0 is also on ASFX TV. That's the only place you're going to find it. And you're also going to then find our daily live trading streams on ASFX TV. So this is a new turn for me. It's a new chapter. We are not individually selling courses anymore. Everything is on ASFX TV, including our Discord. Everything is now built into the ASFX TV membership. So use this free chapter to maybe get you motivated and excited for this new course. I think you're going to like what you have to hear and you're going to want more. So I've got a link below for this new course. And I've also got a link below for Futures 101, which is the prequel, the intro into this new Futures 2.0 course. So enjoy this video. I hope it fires you up. Check out Futures 101 and then move yourself into Futures 2.0. Good luck. And as always, let me know if I can do anything for you.
Funding and scaling your business. We just talked about the professional approach, long-term success, and getting to those payouts. But first, we need to talk about what's keeping you from those payouts. Right? All the cliches, everything you've seen on the internet and online of not using stop losses, too many trades per day, no risk management plan. A big one that we see a lot is unable to stop after that one loss, just doing further damage, digging ourselves a bigger hole. And of course, not having a repeatable setup, which I'll give you in this course here. So that should not be a problem for you anymore. And the old classic one of chasing price and gambling, which goes hand in hand with not having a repeatable setup, that you're really just gambling and hoping and chasing price, trying to just string together a win with no repeatable way to do it because you don't have a process or a plan. Now, what do the successful traders do then? Well, they're going to do detailed daily journals of their trades. Like I talked about on my TradeZella, that's where I track all my day-to-day trades, all my thoughts, all my trades and markups, which takes us to number 2 of markups, markups, markups. I mean, it's really the key to success, especially in this course. We're going to go through plenty of markups that you need to screenshot them, save them, and ingrain them into your mind to really get a hold of these patterns and feel confidence in the recognition of this setup, right? If you just eyeball it and think that you're going to remember it, that's not going to work. We need to store them and constantly go back and review them. They're going to have a risk management plan. They're not going to just risk $500 today, $2,000 tomorrow, and then $100 the next day because they took a loss, right? We have to have a plan of how much money I'm putting on into the market, how much I'm willing to lose, where do I cut my risk, and how much is too much losses in a single day so I don't do too much damage to myself and my long-term growth. And the successful traders recognize that less trades equals more profits more times than not. And we'll definitely take a look at that to prove that you don't need more trades to make more money. It's often the ones that realize, hey, I just need 1 to 2 good trades. I need the better trades, not more trades. And that kind of goes hands in hand with less hours at the desk, right? The more time you're at the desk, the more time you're probably going to find something that you just want to take because you're getting bored or you feel like you're missing out on moves or, hey, I'm here. I think I know what I'm doing. I could find something. I could find a way to make money out of this market, even if it's not presenting your strategy, the one I'm going to show you in this course. And the successful traders like you guys here wanting to consume new information, always constantly learning, looking to get better, learn from their losses, and just also strengthen what they're really good at and what's helping them find success already, but they still want to consume new information because they know we can constantly evolve in our trading. Now, we talked about not having a repeatable setup. That also goes with not having a trading plan. So I want to look at 2 different traders here, and no judgment, but this is just not enough. Our rule is saying 2 losses and I'm done. My risk is going to be if it's a small size opening range or a bigger size, and how much I'm willing to lose in a given day. But it's just not telling us what we need to see on the charts. How much risk am I going to use per trade? Where do I cut my losses? What do I need to see on a VWAP break? What has to be happening across the market? Just more detail. Where if you look at this trader here, his trading plan is very, very detailed on even down to what days of the week and time of day he's going to trade, what assets are on his watch list, and what goes into his analysis of getting into a trade, right? In order to list an entry signal here, what do I need to see to get on into my trade? I'm not going to read all of these, right? But you can screenshot this, save it, definitely go back and read what's part of his plan so that when you're building yours, you know what type of things are probably needed in order to have a nice beefy trading plan, right? Because this is the heart and soul of your trading, right? If you don't show up to the desk with a plan, you're probably going to get smacked around and in for a rough stretch ahead because you don't really know what direction you're trying to take yourself each and every day. Of what assets am I seeing? What's my pre-trading routine? What do I need to see on the charts? What do I need to do before I even get to the charts? And then if I take a winning trade, what do I do? If I take a losing trade first, what do I do? All these different things, he's going to have confidence that if I could just stick to this and repeat this over the long term, I know I'm continuing and repeating my good habits. Where if my rules are just kind of scattered or even non existent, then how do I know if I'm doing the quote unquote right things each and every day if there's no way to track if I was supposed to do that or not? Now, going back to the first trader, this is an example of a daily journal. Like I said on my TradeZella, I track all my trades and I do an in-depth journaling of my trading sessions to see these are the trades I took. These are just some ideas that I didn't play today, but I definitely could have because they're kind of fit into my plan, but I didn't think they were worth the risk. As well as what was the biggest lesson that I either learned about myself or even the trading strategy, the charts, anything off the desk, or even if you learned it on a YouTube video. It doesn't even have to be about the trade markups themselves, right? And then recapping that day. Again, just very plain and simple, probably not enough to really spark some reflection and growth from our trading. Where we look at the second trader with the detailed trading plan, also putting in great daily journals of, okay, here's the trade I took. This is exactly why I got in. And this is how I was feeling while I was in the trade, right? I was getting chopped around for about 30 minutes. My mental capital was being drained quickly. Okay, so he's reflecting on how he's currently feeling, what he wants to do, what his impulses are telling him to do, but he knows better and he's just sticking to this plan. As well as, okay, I only took one trade today over here on the left, but there is all these other potential ways I could have gotten to the market with a high day break here, another one, a range play, a failed breakout, right? Just studying, looking to consume all this different information, get all these mental reps like you're in the gym of just seeing these patterns over and over again. And was there anything I did wrong? Was there any errors I could have maybe avoided? And then what was the biggest lesson? Where this trader here can really go back on the day to day and see, okay, of my entry reasonings, are they kind of consistent and am I repeating them over and over again? Or is it kind of scattered each and every day that there's no real consistent way I'm getting into the market? Or even just seeing the trade management and how I'm feeling. Well, if the same habits and the same thoughts keep coming up over and over again in that how am I feeling, well, then we know where we need to address the most of, hey, I'm feeling like I'm getting drained very quickly. Like I need to work on that. I'm getting into my trades just fine and I'm recognizing the patterns, but what I'm struggling with the most, well, I'm getting drained and I feel FOMO, whatever the example may be, right? So if you don't put that to paper, then you're not really going to recognize how consistently and how much it's happening. That's really where you need to hone in on and focus. Now, I want to take a second and just highlight the success we're having in the BSC, but also what are they doing in order to get these payouts, right? We have Rebecca over here taking a payout times two, very, very good, as well as my guy Mark over here, who I'd say probably a month before these payouts was feeling overwhelmed, feeling tired, feeling drained, and wanting to switch strategies because of just not having faith in it, feeling overwhelmed. But we take the long-term approach of saying we just really need 1 to 2 good trades per day, less time at the charts, less time at the desk to mess around and overtrade, give back profits. Take the long-term approach of just show up for the end of the month, and then we get those payouts across multiple of the accounts. Because same thing with Ben here, which I'm going to highlight in a little bit, taking a $10,000 payout, but we'll say only $2,000 per account, but you multiply that times 5 accounts, you get a nice $10,000 payout, which we'll look at again in a little bit. And then even over here, Alex failed 25 challenges and then 6,000, almost $6,000 payout. Just sticking with it, long-term approach, not giving up, consuming new information, learning from those mistakes of, well, if we failed 25 challenges, there had to have been something I was doing wrong, something I could have done better, something missing from my plan, from my strategy. And then I keep showing up, keep evolving, keep learning each and every day. And most importantly, honestly, as cliche as it is, not giving up. It can be very defeating to fail 25 challenges and not see anything from it. But then I'm sure he's very happy that he didn't give up now, taking an almost $6,000 payout. And then Aaron here, my guy, same thing, taking multiple payouts across multiple firms. He keeps it very simple as well. He has 1 to 2 entries that we're going to go over in this course as well, and just takes it 1 to 2 times per day, maybe 3 times, just less is more. Keep showing up over the long term and just not getting overwhelmed or over analyzing what one given day does, right? So one red day doesn't define us. The results don't reflect of how good of a trader I am. I'm just looking to build good habits, repeat my plan week to week and month to month, and by the end of it, I'll take consistent payouts. And then Thomas over here, one of our great young traders in the BSC, taking his first payout, locked in. He keeps showing up. He asks probably some of the most questions in the Blackshirt Club because he wants to know all this information. He asks people who are where he wants to be, how did they get there? How can he get better? What can he work on? And just really never being complacent and always learning from his trades, not being beat down by the lack of success in the beginning, saying, okay, yeah, I'm going to take some hits on the chin, but I want to learn from them, keep showing up, get better. And I know in the long run, it'll pay off and I'll get to where you guys are at. So keep showing up and you can get payouts like this, just like all the men and women in our Blackshirt Club. Now, I want to look at this monthly chart here on my TradeZella and not really focus on the net P&L, but just the realistic. I'm going to do that again. I want to take a look at this TradeZella month and not really focus on the net P&L, but the realistic expectations it may take to get to a month like this, just based off of the number of trades, right? The P&L will, of course, fluctuate, but you can see I had about 38 trades and across only 15 trading days. So I didn't even trade every single day of the month. So only 2.5 trades per day. That equals out to, with that $12,000 in profit across those 15 days, that's going to be an average of $800 per day that I was making green. And then with the 2 trades per day, well, then if I'm making 800 across the 2 trades, well, then it's going to be like about 400 per trade, which isn't too heavy at all, right? So maybe people may see a $12,000 month and think, wow, he must be risking a lot of money or taking a lot of trades. But it's really just looking for quality over quantity, knowing that these small little base hits of $400 can add up even with not a lot of trades, right? I don't need to stretch out $400 times 50 trades a month. I really only need 1 to 2 per day, right? And this says 38. I'd argue that it's probably even a little less in other months, right? So just focus on the quality over quantity, and the P&L will just follow that, no matter how much you're risking per trade. Now let's take a look at payouts, right? So many people have a target of what they realistically want to take as a payout every single month. But let's look at a realistic trade win percentage at about 65%. Very, very good. So if you're going to average about 2 trades per day, 15 trading days a month, let's say you're going to have 30 trades a month with that 65% win rate. You're going to be having about 20 wins per month, right? So if I want to make 10,000 in a month, how about risking 500 per trade, right? Times those 20 wins, that's going to be 10K in profit. But then I'm also going to take 10 losses in that process of taking 30 wins. So that's going to eat in 5,000 of my profits, and I end up with 5K. That's a very great month, no doubt about it. For a 65% win rate, only 30 trades. That's a great month. But it's just not quite $10,000 like our goal is on the 150K account. So do I need to take more trades, risk up even more? How can I get to that 10K? Because I just fell short there on the last month. Well, if I keep the same $10,000 profit target, what if I do it across just more accounts? So I do 4 50K accounts and I still take the same amount of trades per month, same win percentage at about 65. I'm still going to now even lower the risk to $250 per trade when I just was doing 500. I'm actually going to size down and take the $5,000 in profit with those 20 wins. The 10 losses are going to cut it in half. Okay, so I only made $2,500, but keep in mind, now we're on 4 accounts. So that's how I can get to my $10,000 goal, by taking the same amount of trades, even lowering the risk per account to only $250 per trade. But now, copying it to more accounts, I could more realistically get to that 10,000 profit target without taking too many trades, putting on too much risk, or asking for an unreasonable win percentage. Now that we've recognized that, okay, we're only really looking for a $2,500 profit target each month because I'm going to copy it to each account, you also need to keep in mind that with these funding accounts, with these prop firms, we really are having bought drawdown, that you want to build a buffer so you still have drawdown to work with after your payouts, right? So if we're looking to take that $2,500 out of each account like we talked about each month, you're probably going to want to have a balance of about 5,000, so that after you take out the 2,500, you still have $2,500 worth of drawdown to work with, right? the worst thing to do would be build a balance to, let's say, $3,000, take out $2,500, and now we only have $500 to work with before we blow that account, right? So if I take a $500 loss tomorrow, I no longer have a funded account, but I did take the $2,500 payout. But you have to weigh what is worth it for the long term, right? A $2,500 payout just to lose your account, or take the smaller payout and still survive to trade another day, because the returns won't be always consistent. You're going to have to look to build a trading balance throughout the month, and then sometimes just withdraw anything above that buffer zone at the end of the month, right? So if I want to keep that $2,500 buffer, that's what I'm comfortable with, because that leaves me lots of room to take on more losses after the payout, and I can still survive and trade. Well, then if the balance is only at $3,500 by the end of the month, I'll only be able to take out $1,000 that month, which is not the $2,500, but it's still a payout. You're still alive. You're doing the smart thing by leaving a $2,500 buffer in there, that you still have a greater chance to trade and take another payout the next month, right? Rather than just taking out everything. Now you don't have an account to trade the next month. Now you have to go through the combine phase again, build up the balance, and you likely won't even take a payout the next month. So was it really worth it? Or should we just have taken the smaller payout, survive, and look to get a bigger one maybe next month as we build that balance? Now, before we even get to those funded accounts and talking about payouts, we have to get through that combine phase of getting these accounts, right? And with the 50K being kind of the most popular that we're seeing in our Blackshirt Club, that we're really just buying drawdown, which is the $2,000 with those 50K accounts to go make 3,000. We have to game plan what is the amount of trades I'm going to take per day, and how much risk am I going to have to put on per trade, right? So if we just game plan, if I put $250 of risk per trade, that's going to be about 8 losses in a row before I blow that account, right? We're thinking about our downside first. What can I lose? My drawdown is 2,000. Well, how many trades does it take for me to lose my account? It's going to take 8 losses in a row, which is a pretty bad stretch of trading, which it shouldn't happen. But if it does, hey, we'll take it on the chin, learn from it, and try again the next time. But what if I double that risk now up to 500? Of course, the math is going to be, well, now it's going to be 4 trades till I blow that account. And then if I'm taking 2 trades a day, that's just 2 back-to-back red days before I lose that combine that I just bought. So maybe that's too aggressive, right? Just allowing yourself 2 poorer days of trading. Maybe that's too tight. But I think the safer way to go is probably the less risk, take the long-term approach of maybe passing it in 1 to 2 weeks, which we'll take a look at down here. With that $250 worth of risk to get to now the profit target of 3,000, that's going to be about 12 winners at 1-to-1. But there's probably going to be losses in between that we're going to need more wins. So then you have to ask yourself, how long would it take me to take about 20 trades, right? 12 winners, 8 losses. How long does it normally take me to take 20 great setups? And probably about 2 weeks with those losses in between, right? Because I'm taking about 2 trades per day. I need 20 trades. That's going to at least take me 10 days. We'll call that 2 weeks of trading. So that's the math on the $250 worth of risk. Now, is 2 weeks too long for you? Are you that impatient that you can't sacrifice trading for 2 weeks to try to get to your goals and get to these payouts? Or are we just going to risk too heavy, blow the accounts after 3 days, have to go again, blow it again in another 3 days, another week later? Well, then we just kind of wasted 2 weeks there blowing accounts rather than taking the slow and steady approach. It still took us 2 weeks, but now we're actually at the goal rather than having to keep on spending money on these accounts, right? Now, I would suggest, having just said that, going against what I kind of just said, for the more experienced trader, right, who have already maybe passed a combine before, have traded funded before, they're just looking to go get more, I would maybe say you probably could up the risk a little bit to 500 per trade, giving yourself 2 swings a day to keep you within that $1,000 daily drawdown that they give you on these 50K accounts. And if you're right, you can be up $1,000 in 1 day, and that's a third of the way to the profit target. You only need 3 of these days, right? So I would say with this heavier risk, it's probably for the more experienced that have already passed a combine, have traded funded, that you're really looking to not waste too much time in these combine stages, because you know, hey, I've already traded this before. I'm just looking to get more accounts underneath my belt. I don't want to waste too much time in the simulation phase. But let me try to get to the funded stage as quick as possible. But you still probably will have to be willing to put some more money into those accounts to go get those combines, because you probably will lose a few of them if you're taking the heavier swings per day, hitting max losses really quickly. But if you're right, like you think you can be, you could be up a third of the way and you just need 3 of these days. You could pass a combine in a week or even less, right? So definitely keep into account the drawdown that they give you and your profit target. How many trades do you probably take per day? And how much risk are you comfortable trading to get to that goal? Am I comfortable trying to pass it in 2 weeks? Am I prepared to wait a month? Am I prepared to only have to take a week? Because then I need to figure out what my risk is going to be per trade and how many trades I need to take to get to that goal, right?